Hi, everyone, and welcome to the chapter number 9, which is about accounting for the biological assets. The object of this lecture is to understand what are the different types of biological assets available in the market. Able to explain why the net market value and the fair value has been suggested by the researcher for this measurement of the biological assets. And try to understand different issues associated with the biological asset, like how to measure profit, loss, or the recognition, how we can measure basically the cost when there is a change in the value of the biological asset, what we need to do. Is there any accounting standard which will tell us if on the day first a new lamb is born or a goat is born, what will be the price of that? How are we going to record that in our annual reports? Is there any cost of goods sold for these products as well? So these are the few concerns or few various questions which is affiliated with the biological asset, which we haven't covered in our property, plant, and equipment accounting standard number 60. Now, in this definition of the International Accounting Standard number 41, they talk about two things. Number one, biological asset means a living animal or a plant. And also they include a fishery as a part of the definition. So there are two broad categories, which is animal and a plant. So biological asset plant itself is actually not a fixed assets or not under biological assets. So plant itself is not a biological asset, but the products we are getting from plant, like somebody pluck a fruit, or if you have a sheep and you take out the wool out of it, so that wool is a finished product. So if you have land, it's not although it's agricultural land, but it is not producing the biological asset. It will produce afterwards when you harvest maybe wheat on it, or maybe some other product. So we will see plant only be recognized as an asset once it gives a finished product, not itself. So you have a whale of a grapes. It is not considered as a biological asset, but from that grapes, if somebody pluck and sell that grapes in the market, that's a biological asset. Or maybe from that grapes you make a wine, that's a biological asset. So the finished products from the animal, from the plant. Excuse me. So you have three categories so far. One is tree, another is animal, the third is aquaculture, fishery holdings. So these are the three broad areas for biological assets. Now we talk about different unique attributes of these biological assets. The first and foremost is that they talk about if you have a plant or if you have a bearer plant, and they give the definition of the bearer plant, you can read it later on. It is not a biological asset. It's your fixed asset, come under property, plant, and equipment. However, from that bearer plants, if you come up with finished goods, like you have a tree, it's not a biological asset, but if you pluck an apple from that tree, that apple is your biological asset. So the main word over here by International Accounting Standard number 41, which has given us, is these products are the results of the processing after harvest. So after you do the harvesting, then whatever the results you will get is a part of it. Now in this slides, they give like what is the unique nature or attributes of these biological assets. Like they are naturally have a capacity to grow. They have a great deal of increase in the value owing. They have a great deal of cost incurred on the asset. They have a production cycle might be longer, maybe shorter, depending on what products you have. Like if you talk about a plant, the production cycle is very long for an apple to grow up, get mature, and sell in the season. But if you compare it with other livestock like a chicken, it can grow up in 3 months to 4 months, and you can sell in the market. So production cycle varies with the biological assets you have. Not necessarily has a direct relationship between the expenditure on asset and the ultimate return, because maybe the lamb or the cow is just eating a grass, which is a natural grass. You are just giving them a land to be there. So you are actually not spending any money on the expenditure on the assets. However, you're getting a very greater return. So there is maybe direct or no relationship between the expenditure on the biological assets and the return you are getting. Now, next slide, we discuss about the classification. So this standard high, before this standard was introduced, the biological assets was categorized differently by different companies. Like somebody consider that it's a part of a property, plant, and equipment. Then some of the animals, they are considered as the inventory. And few more method was used before this standard was introduced, so prior to this one. But after this standard is introduced, they suggest that all the asset which is biological should be categorized as a biological assets, which is not a property, plant, and equipment, which is not a fixed asset, which is not a non-current asset. However, the standards say there is no restriction whatsoever the way you classified this biological assets. So they encourage you to classify as a biological asset, like you can tell that which category they belong to. Maybe you have a cow, sheep, lamb, goat, so you have to categorize that one. Or you have apple, orange, or different fruits coming from the trees, you have this category. So it's better to categorize that. But they encourage you, they don't force you. Second thing, it's up to the company. If the management think this is a fixed asset, although it's a biological asset, so first category is fulfilled. Second is subcategories. So subcategories, they don't mind if you classify it as a current or the non-current asset. It's up to you. It's totally the discretion of the management. Now moving further, how should a biological asset should be measured? The biological asset has some limitation. So first of all, before this standard was introduced, they used to measure the biological asset on a historical cost, which is not applicable in the livestock. And there are plenty of reasons mentioned over here. So historical cost method does not work for measurement of a biological asset. Then the net present value method, which I teach you in the leases, IFRS 16, it still doesn't work, the present value method. Then the current value method does not make difficult because it's difficult to measure or assess the cost of the current market value of the product. However, there is one method which we have used to measure the biological asset. So the biological asset is measured on fair market value less the cost to sell. So for example, I have an apple coming out of the tree. The day first that apple cost me, that the fair market value of that apple is, for example, $1,000. So day first, but I believe that this apple, I have to do the transportation, loading, unloading expenses, which is directly attributed to the biological asset. So those are, for example, $50 US. So $950 US will be the day first when these apples were plucked from the tree, should be recorded in the balance sheet as a biological asset, 950. So it's important to understand that only the cost to sell will be reduced from the fair market value of the asset, which is very much important. So beneath that, they give the definition of both what is the fair market value and what is the cost to sell. So this is how we measure our biological asset. I hope this will clear up your concepts. Then next is about, since it is an biological asset or it's an asset, so there is a high chances that the asset might change its fair market value during the course of its production or during the course of its resale. So, for example, today is 26 March. And we have harvest an apples from the tree. On that day, whenever we are recognizing these apples, which is coming out of the tree, which call it initial recognition or initial measurement. What that means, the day first, we will measure that the recent example, $950 US, that's the day first recognition. And we are recognizing as a $950 US. On one end, it will be your asset. On the other end, it will be goes to your revenue in the part of a profit and loss account. So since there is no depreciation on that throughout the life of the cycle, so we are directly measuring the whatever we have measured will goes to the profit loss as a revenue on the day first. So once there is a change happen, it can be happen initial on the recognition. So it will affect the profit loss when it's initially recognized on the day first, which is the fair market value less cost. Then when there is a change in the fair market value less cost happen. So for example, after 1 year, not after 1 year, after 1 month, on 26 April, we are selling these assets or selling this apple. On that day, the fair market value less cost to sell is 1200. So there is a certain increase in the value of the fair market value less cost to sell, which is by 250 US dollar. This 250 US dollar is considered as a revaluation reserve. And again, the revaluation reserve will definitely goes to the profit loss because there is a certain increase. So how biological assets can affect your profit? This is a question. Number one, on the initial recognition day, like the day we plug this apple from the tree. Day two, when we're going to sell it, whatever we consider is fair market value is really the fair market value when we are selling them. So we reevaluate those assets. And if there is an increase, we will again recognize it as a profit or a loss, depending on what was a fair market value at the time of selling. And we will charge that to the profit loss account. So which is also called statement of comprehensive income. So these are the few two places where the biological assets can affect the profit and loss account. Next is this slide basically discuss why there can be any change in the assets. Maybe on the day first we recognize it. Why there is a change when we are selling it? The number one reason is that it may be because there is a physical change in the asset. Maybe the apple market value increase, or maybe they start rotting, so its value decrease. So if there is a physical change in the nature of the asset, biological asset, you have to disclose as a company. It's a responsibility to disclose that if there is a change in the nature because of any physical damage. The second thing is about you need to group these assets based on what category they belong to. Like I tell you before, the company are encouraged you to disclose. Means it's not mandatory, but it's better to you should categorize it in the disclosure part or in the statement, financial statement. Like in balance sheet, you can tell this is the apple, orange, banana, blah, 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 whatever the products you have biological asset in a group category. So by the way, this information of group category is less useful when the production cycle is less than 1 year. Like we give an example of a chicken which they are raised within 1 year and we're going to sell that within 1 year. So we don't need to categorize that. We already know this is a short-term product which is come and go. Then this slide discuss about the product of agriculture. So agriculture product, as we discussed earlier, the apple, orange, and blah, blah, blah should not be considered as biological asset when they are attached with the tree. Only when you pull it from the tree, pluck it from the tree, then it is considered as your biological asset. So in order to define the biological assets for the agriculture product, the product should be separated from the tree because tree itself come under property, plant, and equipment. So that is different accounting standard, which is a fixed asset. However, this is not a fixed asset. This is more like an inventory which we're going to sell it very soon. Next, what is the disclosure requirement by the accounting standard number 41? International accounting standard 41 say you have to discuss the nature of the biological asset. Whether it's a short-term, long-term, what is the classification we have or sub-classification? So you need to mention this as a disclosure requirement. Next, there's a lot of criticism on this accounting standard by different academics. They don't believe that fair market value less cost to sell is a true measurement for the livestock, like academics like me. They also provide nothing. There's a not positive by the local companies. A local company do not welcome this accounting standard. They have a reason. They say when we are putting the fair market value less cost to sell, it will definitely affect our payout ratio. Payout ratio is very much important for the investor to look into while investing into the company. So here it will definitely affect this livestock. So therefore, it kind of become it unfavorable. So once this ratio become unfavorable, the shareholder don't prefer to invest in that stock anymore. So remaining two slides is about the summary what we have already discussed. I hope you enjoyed today's lecture. Have a good day. I will see you in the class. Bye-bye.